So get the officially started, and then we'll go ahead and have the exchange. Okay, thank you. The Committee on General Government Operations, Finance and Taxation, and Youth Development will now come to order. It is 4:32 in the afternoon. Thank you, everybody, for joining me. Today, we're convening to have an oversight hearing with the Department of Administration on a number of questions that we submitted to them regarding our questions concerning the 2014 deficit, certain financial management items, and how all of that relates to our current situation in FY 2015 and going forward. And so before we begin with tackling the questions that we've provided to the agency on May 12th, 2015, I'll go ahead and yield to the Director of the Department of Administration, Mr. Tony Blas, to go ahead and provide an opening statement on behalf of the Department of Administration. Sir.
Thank you, Mr. Chairman. Nicolas is Masi and also Senator BJ Cruz. Again, on behalf of, I would like to first thank you for allowing us this opportunity to represent the Department of Administration in my capacity as Director. Despite this whole issue, I'm honored to speak on behalf of the colleagues here at DOA and this administration. I know that many of you are wondering what is a paper deficit, and that's just it. There's no definition of a paper deficit. The term was used as a non-accounting description of simplicity, describing a deficit where revenues are recorded in a prior year fiscal year and expenditures are recorded in the current fiscal year or the year being audited, where there's a liability that was unbudgeted but was paid. The examples we're talking about today is solid waste debt service, which should have been paid by the receiver, but was paid with general fund cash because the receiver did not remit its payments. The error expenditures were recorded in the year being audited, but the revenues were recorded in a prior year sitting in a trust account. Capitalized interest for bonds was cash sitting in a trust account, but has to be reported, adding $8.6 million to the deficit. By the mutual responsibility of the legislation and administration, the spurge from previous deficit years was tempered by restraint in the fiscal 2015 budget. We are on track to keep from an enduring pattern of deficit spending. We must maintain this course. Lastly, may I apologize for the lack of responses to the Office of Finance and Budget. I do not wish to come up as making excuses for DOA, but I at least owe the people an explanation. We are in the fiscal team, especially our accountants at DOA, hesitate to provide information that is unverified and not ready for scrutiny. You asked for revenue reports that took us time to produce. You know by now you will see further in the 2014 audited financials that we had to vigorously reconcile draft reports with transactions and proper journalizing according to the ever-changing accounting standards and rules of accounting. This is largely due to the antiquated financial management information system. It is my commitment to work with you more closely with the Budget Committee and the Finance Committee. I will answer any questions that now to the best of our ability. Nicolas is Mr. Chairman, and Senator Cruz and Senator Adam. And we have the questions right now. We want to go to that.
Okay, thank you, Mr. Blas. And I'm joined this afternoon by Vice Speaker BJ Cruz and Assistant Majority Leader Senator Tom Adam. Thank you, gentlemen, for joining me for this oversight hearing. So we've sent a total of 7 questions to you, Mr. Blas.
Yes.
And before we get into them, I just want to kind of preface why we're having the oversight hearing and why we wanted to get these answers for these questions. This time last year, and this was already confirmed in our previous oversight hearing chaired by the Vice Speaker on the Bureau of Budget and Management Research, BBMR, where they confirmed that we never ever got word from the administration that we were tracking a deficit. We were always being told that we're tracking a surplus. And it wasn't until 8 months into the current fiscal year that we were told that last fiscal year had a $65 million deficit. And so my concern is at this juncture we're being told the same thing as we were back in FY 2014, that FY 2015, the current fiscal year, is tracking for a surplus also, that the revenues are higher than the projections. But my overall concern is, if that was what we were told last fiscal year and it resulted in a $65 million deficit, how can we move forward with confidence on those same statements this fiscal year and be assured that we're not going to end up in a $65 million deficit again this fiscal year, or whatever potential number that may be? And so when I was reflecting on just how we've been doing our budgets and how we've been actually realizing our expenses, one of the things that really jumped out at me was the fact that we budget Section 30 money for the ensuing fiscal year. This is also on the record with BBMR. But in last fiscal year, and I believe in the fiscal year prior to that, we actually expensed the Section 30 money that was supposed to be for the ensuing fiscal year. We expensed it in the current fiscal year. Last fiscal year, we did that with the Section 30 money in order for us to pay tax refunds. I remember that there was a bill that was introduced, and there was some dialogue that happened that said just use the cash to pay it. But how can we be spending Section 30 money, and we're anticipating Section 30 money again this August, September. If we spend that Section 30 money in FY 2015, how then are we budgeting for that same Section 30 money in FY 2016? I guess that would be my first question.
I think those questions were asked of us on the 7 questions you gave to us, Senator. I mean, we can go through it, and I think those questions can be answered in our responses to the committee and all the members of the legislature as well. But
Mr. Blas, that's actually question number 5 in the list that I gave you. So go ahead and jump to number 5, and we can just start from there.
Okay, we did. Senator, I want to introduce our staff. I mean,
sure.
our team here. Albert Duenas, the Deputy Director of Department of Administration, and Kathy Kagigi, the Financial Manager for the Government of Guam, for DOE. And question 5. During the recent oversight hearing with BMO...
Bring the mic closer to that.
Okay. Yes, sir. We'll do that. It's special. Okay. During the recent oversight hearing with BMO Director Calvo, stated that the Section 30 revenues is intended to be expended for the forthcoming fiscal year. Was the Section 30 revenue was received for the end of 2014 and used for 2014 expenses? That's what you're saying. Well, Section 30 was originally paid after it was collected by IRS. And when we encountered revenue shortfalls, we approached Congress, this is years ago, to pay Section 30 in advance of collections at the end of the tax year, in which we reconciled the advance payment made with the actual collections. If the collection is larger than the advance, because we were given the check for the difference. If the collection is less than the advance, then we offset with the next advance payment. But I guess the whole question on the use of Section 30 and intended for the forthcoming year, and for us, from our own perspective, for example, tax refunds, that's an example you asked of us at the time. I know that when we do, this is a cash management tool that the Department of Administration has been using for decades, and when Section 30 is one of the components that comprises the general fund revenues, and from an accounting perspective, we're talking about accounting and budget. There are 2 different issues. From an accounting perspective, we account for these transactions and we pay for it. And this when we do, for example, tax refunds in 2014, and this was accounted for in 2013 revenues. That we paid that in the previous fiscal year. In 2015, are we going to use Section 30 for 2014? Well, the 2000 maybe in August, September, when we receive the advanced Section 30 funds, we will use that as one of the cash management tools for the government. And again, tax refunds was always one of our major items we have to take care of. Now, I know again this is all from accounting and accounting our transactions and the recording of, and the accrual of the modified accrual system that we use. And Kathy can speak a little bit more about that on this whole issue. Okay.
But I mean, just to clarify, so the answer is yes.
Yes.
We're going to be using FY 2015 Section 30 money we receive August, September to meet our FY 2015 expenses.
Yes.
Okay. And the reason why that is an issue is, Section 30 money isn't something that technically is guaranteed. I mean, that's something the federal government provides to the community. They do it as under their current federal requirements, but they can always one day turn that off, right? And so one of the reasons why we always make sure to budget with that money for the ensuing year is because in the event that it were ever get turned off after that current fiscal year, we wouldn't be in the hole all of a sudden and just assuming that it was going to be coming in. But at this juncture, because we're paying FY 2015 expenses with Section 30 money that we're technically going to be budgeting for FY 2016, if in the event that for some reason we don't get Section 30 money in FY 2016, we will be short by the amount that we budgeted for. Is that correct?
And we pray that that will not happen, and we're very confident that will not happen. And I think that's the agreement we have with we have our congresswoman. I'm sure is going to defend us to the hilt, and I think this is an obligation for all of us, and we continue to fight for what we all these fundings that belong to the government of Guam. I agree with you, Senator.
No, yeah,
I understand.
and see, for me, it just becomes a question of risk management. Because technically we don't have any control over whether we're going to be getting Section 30 money any forthcoming fiscal year. I mean, if the federal government were to have some kind of major financial crisis and they start looking for whatever they consider to be fat that they can trim, the territories oftentimes get the short end of the stick. I mean, if we look at our compact impact money, we already get way less than what we probably should be getting, than what we know we should be getting. And Section 30 money, as much as we've grown accustomed to that being something that's reliable, we even floated bonds on that money, and for us to be expensing that revenue that was anticipated for the ensuing fiscal year in the current one, it creates a concern for me, because if we're going to try and balance that amount, then that means that we would need to cut that much out of the budget if we didn't receive it.
Yeah.
So that's the risk. That's the current environment that we're in right now.
And we pray that that's going to happen, and we
Right.
continue to use these cash management tools that we have before us. And I understand, and unless of course the government Guam wants to, I guess. The person for the legislature will want to look at other alternatives in case that should happen, and we hope that doesn't happen.
And so this ties into question number 7, and I thank you for confirming your answer clearly. So if we are going to be using FY 2015 Section 30 money, if we're going to be using FY 2016 Section 30 money in FY 2015, the Department of Administration still believes that we should include that same revenue source in the FY 2016 budget.
Again, the question.
Because my concern is we're booking the same. We're booking the revenue. We're booking the revenue twice technically. We're expensing it in FY 2015, and we're also budgeting for the same revenue in FY 2016 because we're assuming that we're going to receive it in August.
Okay. Yes, and I guess for the committee, the question is: we'll be using fiscal 2016 Section 30 funds in anticipation of this August, September to pay the tax refunds. That's the same question we spoke on
Right.
question 5. If so, does this mean we should not budget the full 2016 Section 30 revenues because it's going to be spent in fiscal 2015? Again, this is kind of confusing, but accounting with budget. When we have cash, we are able to pay out our obligations. Section 30 monies was received in fiscal 2015 and are advanced and not recorded as revenues in fiscal 2016. Although we use the cash in fiscal 2015, it still has no effect on the budget in fiscal 2016. It's just a timing difference, and no adjustment to the budget is necessary at all. So this is a modified accrual system, and cash are two different issues.
No adjustment to the budget will be necessary if we receive the anticipated Section 30 money in August.
Yeah,
to make up for that amount that we already budgeted and spent for.
Well, this is the management of cash in general, and there's peaks and valleys. And okay,
What?
Just state your name for the record.
My name is Alfred Duenas. I'm the Deputy Director of DOA. We want to make it clear that when the Section 30 money is received in August, it is not 100% spent in August and September. The bulk of the money for Section 30 is what the government used to operate the beginning of the new fiscal year in October, November, and December. So, for example, on November, we are mandated to pay COLA for the retirees. We do not generate enough revenues in November to pay for the COLA. We use the Section 30 money. This is part of the cash management. We anticipate to pay a lump sum in November. And COLA is an example of how we should continue the budget, and because we will use it previous fiscal year and the new fiscal year.
And that, I understand, Mr. Duenas, and that further underscores why it's so important for us to delineate between whether Section 30 money is supposed to be for the ensuing fiscal year or for the current. Because if it's for the ensuing, which it was historically, that was confirmed in our oversight hearing with BBMR. If it's used for the ensuing, then yes, we have the Section 30 money to float first quarter 2016. We have the Section 30 money for COLA and everything else. But if it's going to be expensed in FY 2015, when it was supposed to be for those upfront things that need cash flow for 2016, then how, and that's exactly why I'm asking, how can we, if it's already being expensed in 2015, be also expensed in 2016?
A certain portion of it. And don't forget, that's why when we went to Congress, they amended it to make it an advance, to cover the end of the fiscal year should a shortfall occur.
Right.
And like I said again, the bulk of the expenditure of the Section 30 is not totally spent on the year it was received.
Well, you know, I don't want to get into whether or not that is actually the case, but if we could see some kind of record of when the expenditures of Section 30 money actually occurred, that would help us to fully clarify how much gets spent in August, September, versus how much gets spent for the actual budget items in October, November, December. But right now, I'm just, because I know that in our previous conversations, also to include your confirmation hearing, we did talk about how Section 30 money was being used for the current fiscal year needs. And so if the understanding of the legislature, and this is what I've come to understand, and the budget chairman can chime in if I'm incorrect, but we've been budgeting Section 30 money under the assumption that all of it was going to be used for the ensuing fiscal year. But now we're getting confirmation that some of it, at least, is being expensed in the current, and some of it's being used in the ensuing.
And you're right, Senator. I guess in the discussion about tax refunds, it's not an advance so much that we advance the use of some of the Section 30 funding to pay tax refunds, and tax refunds was accounted for in 2015 budget, and that's part of that income tax efficiency trust fund. But at the end of the day, this is a cash management tool that we have before us, and we continue to ensure that we have to pay the expenses that is asked by the legislature and the taxpayers and the public, and they want to know. And this is I guess for years and years we've been doing this. And we're grateful that we're having these kind of items here. It's easy for us to, for example, COLA. COLA is one of the major issues for us for the Malamco, the senior citizens especially, and you know, I guess we can, instead of using Section 30 funds, we can use funding to take care of to do monthly. If their COLA payments only $1,100 or $1,800, then we do that by 12 months. I think the public in general will say, "Come on, this is our the elderly. Why don't we just give the $1,800?" And we did, and the legislature wanted to do that, and we followed their rules as well.
Thank you.
My name is Catherine Kakiki. I'm the financial manager of DOA. Okay, let me just give you an example. what we're trying to say is this is a cash management issue. You got to keep in mind that Section 30, where's the source of funding coming from? It's coming from the withholding taxes from the military. And then what encompasses tax refunds is determined on a percentage of income taxes, which includes withholding tax. So it's just a matter of, timing. Do we want to wait till October to pay tax refunds, or do we want to pay it right away as soon as the cash is available? So it's just a timing. It's a cash management tool that we use because we want to get the refunds out as soon as we can.
I very much agree with you, Kathy. For me, it's also a question of if we're going to, and I agree with you, if we're going to agree that we need to pay tax refunds as quickly as possible,
Yeah.
my question that I'm trying to reconcile is, do we budget for the same dollar twice then? If it's already being spent for the tax refund, do we budget for that same dollar in the ensuing fiscal year if it's already been expensed in the current? And the logic is,
Right.
and I understand it is, okay, well, we're going to get Section 30 money that fiscal year also, so it's going to make up for the amount that we budgeted for. But the concerns, the risks that we expose ourselves to is if that money, for whatever reason, were to be reduced or what have you,
I see.
or if the budget items that we become accustomed to are unable to be funded, then how are we going to go about making up for those shortfalls? And I'm bringing this up so the budget
Okay.
chairman can hear it and
Yeah.
understand it, so he can. We're going to have to work together when we put together the FY 2016 budget to really figure out: are we going to be in clear conscience able to fully appropriate the Section 30 money we received this August, assuming we're going to be receiving it the next August, or do we need to come up with some kind of a risk modification for us to be able to say, hey, if that money for whatever reason doesn't come in, we're
Right.
still going. This is how we're going to cover all that shortfall. I mean, we're going to need to figure that out from a policy perspective.
Okay.
You have a question, Senator?
Yeah, just before we get too much further. So then, if the FY 2016 Section 30 funds comes in, let's say in August, before you can spend any of that, it has to be appropriated first. Is that correct? Does it?
It's
So
booked
the-
as revenue for that.
Yeah, it's booked as revenues in fiscal 2015.
It's booked as revenue? Okay, all right. No, let's, before we go back there, I'm just trying to really follow along. So if, let's say, Section 30 money comes in August, FY 2016, Section 30 money comes in, and let's say that amount is $30 million. Now, Mr. Dueñas, you indicated that a portion of that is used to pay for expenses during the first quarter of FY 2016,
Right.
correct? And that amount would have been appropriated in the budget bill for FY 2016. Is that correct?
Right.
Now, the balance of that, you said that FY 2016 funds that is received in August of 2015, a portion of the balance of that then, or however much is set aside, is then used to pay for, you keep referring to tax refunds, correct? Now, for some reason, I don't recall having had to vote on a bill that appropriates that new Section 30 money, the FY 2016 money, to pay for FY 2015 expenses. But in the budget, when we pass the budget bill, we appropriate basically the general funds that are projected plus however much is set aside for first quarter expenses. Is that correct? So I don't. So then, where do you get the?
It balances out the following August when you receive the new advance for the following fiscal year. So whatever shortfall or whatever would kind of like offset whatever you spent on the first advance for Section 30 that you used in the prior fiscal year. When the new advance comes in, you can use a portion of that for the expenses of that current fiscal year. So it's kind of like a continuing appropriation. And
Okay.
You would use part of it for FY, this and then the balance, and then.
Yeah, I think I'm following.
Yeah,
I
yeah,
just need to
And
slowly.
that's why it's a
chew
cash
on
tool.
it. Okay.
The cash management will be used in that case.
Now, if we've always been, well, if we've historically been supposed to be spending Section 30 money that we receive in August for the ensuing fiscal year, that October, when did we start commingling current year expenditures with next fiscal year projected revenues?
Yeah, there's no commitment.
If we're budgeting, if we bring in $65 million in this August, September, and we budget that $65 million for FY 2016, but we spend some of that $65 million in FY 2015, and then we use the next year's Section 30 money that's meant for FY 2017 to catch up for the FY 2016 expenditures that were short because we spent the money in FY 2015, then we've just commingled all of the revenue and expenditures
But
over the
Senator,
course of those fiscal years.
This is budgeting and account are two different issues.
No, I understand exactly what it
So-
is, sir. What it is that we're taking money that we have now to pay for expenses that we've accrued now, but we're using that same figure for the money that we're anticipating for the next fiscal year. But when you separate it out, the money's supposed to be for the ensuing, and now we're using it for the current. So I'm just asking, when did we start doing that?
That's always been the process. To give you another example of it,
Can you speak into the mic, please?
is like gross receipt tax.
Yeah.
The GRT that is for sales that was done in September is paid in October. So that's the previous, technically you could say that's the previous year's revenue because the sale, the transaction took care on that particular month, but it was paid on the following. So even though the sales for September was budgeted, was accounted for
Right.
in the beginning of the fiscal year, we did not receive that until the new fiscal year
Right.
started.
And that's accrual accounting.
And it's the same thing as section.
Modified
But,
accrual system
but
we
what's
have.
concerning me is we're choosing to use cash accounting to pay, and we're choosing to use accrual accounting to budget.
Modified accrual accounting.
Modified.
that's it.
Modified accrual accounting. But do you see what the
Set it
problem
up.
is? Every accountant knows that we have to choose one or the other. We cannot use cash or accrual when it fits us because then we're going to screw up the books. So if we're going to use cash accounting to meet the expenses of the Section 30 money, then why are we using accrual accounting to budget for that same Section 30 money?
Actually, the budget,
It's cash.
the budget of the section 30 is budgeted for the upcoming fiscal year.
Right.
Yeah.
The cash is received. When the cash is received, it has to be booked. When the
And we're-
section 30 advance is received, it has to be booked on the month that it's received.
Right. But it's supposed to be spent for on the accrual calendar.
Well, based on the authorization of the section 30, it could be used for the calendar, for the fiscal year that is received. That's why it's advanced
But which authorization is that?
by U.S. Congress.
That we can spend it on a...
That's why they made it an advance. We asked them to make it an advance.
At that time.
Vice Speaker?
But the way that was, in the old days at least,
Right.
when we got the 70 for the ensuing year, we were, 1/12 of that was supposed to be available every month for the next 12 months of the next fiscal year. I mean, that was the intent. At least that's how I remember it when we, admittedly, it was before some people were born here, but it was supposed to be, when we received it on September the 30th, it was supposed to be divided up into 12 for the 12 ensuing months of the next fiscal year. And it just became bad practice, and whether or not it has been something that's been done for decades, it doesn't mean that it's correct. We have to, at some point, stop and say, this is wrong, and we're going to have to stop the practice. Because, even with the tax refund efficient trust fund, or whatever that's called, why don't you explain how that's supposed to be done? Because it really bothered me when your chief financial person is telling me that we're hoping that we're going to be able to pay the tax refunds and use that money. Because my understanding of the provision and the trust fund is on December the 31st, there should have been $150 million in that fund to pay for everything starting January the 1st. Not, well, let's try to find cash in January and February and March so that when we're in the last week of May, we're now paying for, we can only get to February the 10th. On February the 11th, once you got it was considered to be a tax refund, was approved, it should have been able to be paid that day because there should have been money in that account. And when we borrowed the $300 million for the tax, to pay the tax refunds, we were supposed to get to ground zero, and we were supposed to build up the trust fund so that every year after that, we could make the payments as timely as possible. That's why the chairman kept saying, it's not that we're supposed to be doing this every month to pay for now. What we're supposed to be paying for the 26% every month is so that next year we have the savings account. It's not for this year. But what we're doing right now is we're using the fund to pay for this year. And it's not supposed to be that way, or unless, of course, you're going to tell me that I'm mistaken about what the trust fund was supposed to be for.
So let me just try and keep it all focused on what we're talking about here. I understand that there may have been practices over the course of many years that have resulted in the way that we're currently managing the finances now. And the conversation that I want us to have is, are those the best practices, or should we be working together, administration and legislature, budgeting and cash management, to try and right size us back into the practice that we were supposed to be doing? Where, for example, if it's Section 30 money for the ensuing fiscal year, then it's all for the ensuing fiscal year. And then we balance the books by trying to come up with ways, at least for one fiscal year, to get us back on that track. And if we're going to do that, we're talking about, what, $65 million for Section 30 money? Maybe we can wean ourselves back into that by doing $10 million a year to try and get us back into that kind of practice where the ensuing fiscal year gets 100% of the Section 30 money versus a fraction. I mean, I think these are the kind of conversations that we need to start having if we're going to begin getting back to a budget that reflects the timing and the consistency, not only of the Section 30 money, but also of the income tax trust account money. Because, you know, it's very easy for us to take the cash that we have available now and use it for the needs that we have now. But ultimately, it's also what we're budgeting for. I mean, over how many fiscal years our budget has increased by several $100 million, you know. But if we just did these cash management things those years ago, we would have grown our way out of this current circumstance. So
I guess for all of us, cash management to accounting, this is something DOA has administration we have to do, and an obligation is an obligation. We have to again be responsible and pay for those obligations like tax refunds, and I know that I guess it's going to take time for us to continue to have a funding available for all these different mandates that were given for Gov Guam, but we, at the same time we have to pay our bills, and this is one tool, cash management tool, we've been using for years. And I know that we're lucky that we've been very fortunate that we have this tool for years, and I know that we have major deficits for decades, and nonetheless we move it down, and we don't have recurring transactions, and this for this $65 million deficit. This is something I guess we spoke about publicly, and I worked with the chairman, Vice Speaker BJ, and we spoke about the major items: solid waste, the ARA, and the capitalized interest, and law enforcement as well. Those are the major issues that comprise those items here. Again, in our questions to all of them, actually we're going to go back and talk about the other questions we have before us, but in our conversation with all of you, I know that this is a consolidated financial statements that comprise all of it, the general fund and all the other line agencies that were included in the major comprehensive GovGuam audit that's going on.
Back on the questions then. So for question number one, for example, when you're explaining your definition of paper deficit about how you're booking the expenses because you've realized the revenues in previous fiscal years. So basically then to offset that $65.3 million debit, you already have identified the credit.
Yes, and in fact, Senator, when we talk about debits and credits, there was no question, there was no controversy, and for when we had a nearly $600, deficit. Nobody ever talked about debits and credits, nobody at all. And now today we're talking about $65 million, and we explained publicly and to the Vice Speaker as well to tell you specifically what those items that comprise the $65 million. And again, for us, when you talk about $65 million debit, what comprises $65 million credit? Well, cash was used to pay for all these obligations. Trust funds was available for DOA capital projects and capitalized interest. A portion of the law enforcement and Guam Department of Education vendor payers were paid in this fiscal year. And in fact, we have before us the T accounts that we do for us from an accounting perspective on where which cash has been debited and which is credited. For example, the DOA stimulus fund capital projects expenditures was $20.1 million, and of course we have a T account from an accounting perspective, and we do and we credited cash, DOA trust cash. Capitalized interest expense, $8.7 million, and we credited general fund trust cash, 8.7. Law enforcement, $32 million was accrued, and then in general fund cash in 2014, fiscal 2014, we credited $25 million with a general fund accounts payable item for $7 million. The solid waste cash, again, $2.3 million that we got from cash, and we transferred into the $2.3 million that with the receiver finally gave us $2.3, and again, that's something we can talk about solid waste and another issue. Guam Memorial expense 2% reserve, $7.8 million, and cash was credited in the $7.8 million. So that whole comprises the $65 million that you asked about.
Sure. My only question for that is, in what fiscal year were those credits booked, and did those credits inflate the revenue? If the debits were all realized in FY 2014, then the credits had to have been realized in 2013 and 2012. And if they were, because we were also told in 2012 and 2013 that we didn't have a deficit, or that the financial situation was improving, did that, because those credits were booked then, if we less those out, what was our true financial position? Because if we less those out in 2013 and 2012 to balance to 2014, then what was the actual financial position in 2013? And what was the actual financial position in 2012?
Those obviously we had surplus funding, and we were able to take care of our needs, and even with the deficit we have, the $65 million, we were able to continue to manage our operations, and we had that with $65 million with these transactions we outlined. For decades we had hundreds of millions of deficit at the time, but nonetheless, that's this is an issue we have before us, and then I know that working with the Vice Speaker, the Chairman, who's we're trying to track, continue to follow the budget that you gave to us, and we want to continue to do that to ensure that we want to at least get tracking a surplus, and we want to continue to have that process to ensure that we will have that.
See, for me, what I would like for us to be able to do, because I really believe that data, especially when it comes to money management, is incredibly important. And if we have to go back and modify what our actuals were, or restate what our actuals were in 2013 and 2012 after we adjust for these one-time items that we didn't reconcile until 2014.
No, but
Then
when you're talking about,
we need to go back and we need
if
to
you're
do
talking about
that.
our funding, no, those audits were closed. In 2011, you were talking about the our funding. The our funding in 2011, when Senator, at the time, Director Marissa Bertena Schaefer was there, and she worked with Governor Cabo, I know to ensure that they keep that grant funding to be utilized, and she wanted to use that to take care of other expenses or the salaries, teacher salaries, and so. But at the same time, they went to work with U.S. DOE, and they were able to keep those fundings. So the general fund was used to fund the DOE teacher payments, and they kept that general fund money in a trust fund to use for capitalized to capital improvement projects. And so, and again, we expense. We've been using this kind of funding, and so the general fund has been using for decades. And at the end of the day, in 2014, that trust fund was paid by the general fund anyway. We just expensed that in this fiscal 2014.
But I think what the chairman is asking is, in 2011, when DOE showed a $65 million surplus, right?
That's right.
Because we put that money in there because we were going to eventually deduct that in future years. And you were able to turn in a audit for 2012 that said, we're in a surplus because we have the 65 million. DOE is $65 million surplus. It wasn't really, was it? If we had taken that out, and I think what the chairman is saying, is if you had taken that out of DOE in 11 and 12 and 13, what would their standing really have been? Wouldn't they have been already in a deficit spending at that point, but for the fact that they were being saved by this $65 million infusion that was reduced to 40, to 30, to 22, and now we're taking out the last 20. We're trying to say, what was it?
Senators, if you read our audit reports, we will have financial highlights, and part of it is our highlights for the general fund. And we are transparent. We do mention the reasons for the increase or for the surplus, and the surplus for FY11. It does say in the audit report that it was primarily due to the error receipts for the GDOE capital projects. So
and I think the chairman's yes, no,
yeah.
I understand.
Yes.
But if you just go to the first couple of pages, it says, I have a surplus. You have to go to page 340 in two little footnotes that say the reason for this highlight is that because of the fact that we have the 65 million, DOE is showing a surplus of 65. Consequently, GovGuam is showing a surplus of 28 or some whatever number that is, because that was, I hate to say it wasn't really artificial, but it really, it was artificial.
Yeah, and again,
yes, you were transparent. You admitted it in the footnote on page 340.
No, but
in the first page and in the summary, we glowed about the fact that there was a surplus.
Okay, but usually, and the OPA does a very good job in being objective, and they did stress that in their highlights as well when we issued a report that the surplus was primarily due to the error receipts. So it does say there, and it's highlighted as well in our audit reports.
But see, and this is where, though, we need to be very prudent about how we package the information.
Correct. I agree.
And
yes.
and because when we start, when the general knowledge is, we're in a surplus, I mean, it makes for good politics,
right.
But it makes for very poor planning when it comes to anticipating what the future revenues might be.
Yes.
Because everyone in their mind gets this idea that we're in this surplus and that obviously
Correct.
we're trending that way. when the reality is that when you balance out the debits, the credits, the surplus figures might not be as ideal as we would like them to be. And the reason why that's important is because from a policy perspective, once we begin getting that signal that we're in a surplus, then we begin saying, okay, well, what else can we start, paying for or doing that we haven't done in so many years, like, whether they're pay adjustments or anything else for whoever. Those all become the centerpiece of the conversation.
Yes.
Oh, our finances are tracking this well. We're going to move these things forward now.
Right.
And then only to come to find out that, oh, well, if you had the footnote on the farther back page, you would have probably seen what was different from the packaging of the overall report. So, if we can get some kind of reconciliation between what the FY 2014 numbers show and how that affects prior fiscal year numbers, so we can get a true picture. When you adjust for the one-time items and you cancel out the debits in 2014 to the credits in 2012 or 2013, what was the true revenue picture, so that we can get an understanding of that? Because the other question becomes also, right, when we do our budgeting, we base it on the 5-year rolling average of what our revenues were. Now, when we don't go back and rebalance those things, we're going to screw up the projection.
Sure.
Because otherwise 2014 is going to show $65 million in the red, and that's going to throw off 2014, 15, 16, 17, 18 projections if it's based on that rolling average. But if we can go back and properly account for it in the different fiscal years, then it'll balance out the rolling average and it'll have more of it'll help us to get to a more actual number. Is that something we can do?
Yeah.
I'm sure that's
we can work with that.
SAS
Work with you guys.
the budget chair.
Can get that.
I did have some questions about the capitalized interest, because having come from the financial industry, I understand exactly what the capitalized interest was. We basically included it in our financing. Yeah, we basically included it in our financing to be able to make payments on our debt service. So, shouldn't that already be factored into the bond payments? Why was capitalized interest a single item on the deficit listing when it should have already been factored into the budget for the debt service?
Again, I think this response for the capitalized interest is the same response as your earlier question. With regards to like the arrow receipts, I don't think you're going to have any issues regarding the budget. The reason why is because the cash, when we receive monies right in advance, for example, when you take out a mortgage, let's say September 14, before the fiscal year ends, you receive the cash, right? You also recognize the revenues for the mortgage proceeds. So it's recorded in 14. But then when accounting principle says you have to record expenses as it's incurred. So your home is completed the following year, FY 15. So you expense it in 15. But it doesn't affect the budget. You don't need to budget for FY 15 for your mortgage because you had already done it. You have already recognized it in FY 14 and you have the cash. So there won't be any issues as far as the budget goes. Right. It's just timing difference, and it's the same response for the capitalized interest. Right. You're right, we received the bond proceeds back in FY 13. We did recognize as revenues, but now that the interest is due, accounting principle says you recognize expenditures as it is incurred.
Right.
And for FY 14, 8.6 million was due and paid by the bond proceeds.
And so, when I read the financial statements of companies, right, that file with the SEC, they separate out their revenues and expenses based on by segregating out one-time items. So, for example, if they had a one-time item for debt service, for capitalized interest being put into an account, they separate that out so that it's not commingled into the overall.
We can do that. In fact, that's a good recommendation.
Yeah, so if we can do one-time items, not only for revenue purposes, but expense purposes. Yes. Because sometimes in private companies, they do a one-time item write-off for an asset that's no longer valuable. So if we can start doing that on our financial reporting, instead of just commingling everything into one big revenue and expense report, that'll really help us from a policy perspective to be able to say, hey, you know what? Yeah, revenues went up by 7%, but 50% of that was one-time items. We can't budget for that next fiscal year.
That's right. In fact, I'm working with the auditors right now, so that's one I need to be included in the 2014 audit and some recommendation.
And that CAFI, two questions. When I looked at it, was I incorrect in saying that it was for CAFI for 3 different fiscal years that add up to the 8.6?
The 8.6 was just for FY14.
But when I
it-
looked at the statement, I don't have it with me, but it looked like there was about 2 million from 12.
That's
about
correct.
3 million from
There's
13.
two bonds, the BPT 12 and the BPT 13.
Oh, is
So
the
there are 2 bonds that were affected.
Yeah, but the thing was what they were listed under 3 different fiscal years, and the total happened to be the 8.6, which was somehow booked in 13. Why wasn't that taken out in 12, and why wasn't it taken out in 13? Because it would have, if it had been taken out in those previous years, we would have had a deficit in the 13, because you had coincidentally a $3 million surplus. If you had taken out the CAPFI that year, like you did this year, you would have had a deficit that year, wouldn't you?
I agree, sir. We did have capitalized interest for the past 3 years, but it was recorded as an expenditure, and we can provide you the audit report, or it won't differentiate the capitalized interest from the interest that is actually paid by general fund, but we can break it down for you.
In the
And it
readings,
was expensed in those
but it was
those
for 3
respective
different
years.
years that
Yes, sir.
accumulated into
Yes,
this
sir.
8.6.
yes.
And in the readings that I did, am I wrong in thinking that you should only have CAP-FI if it's a capital improvement project, like building the house, not for non-capital expenditures? No?
I don't have the specifics on it, but we can get it to you, Senator.
And just to be clear, so that my
Sure.
my office has when we get the transcript, we'll get it clear. Which bonds were these three?
The Series A, B, and C. B, A, and B, and C too. We get the specifics on that.
Yeah, because I mean, I'm still trying to figure out which one it was,
The 8.6.
and so it's hard for
What
me to
accomplishes
figure
the
it out when
8.6?
when you guys don't provide that as to what it was.
Also, Senator, when we do the budget, when they do the projections for the budget, CAP-I is not included. It's did you understand that? Yeah, it's just what's required to be paid from current year resources, whether it's general fund or the hot bond or whatever. Okay.
But immediately once we borrow, because capitalized interest is already factored into the debt service, once we borrow, that's already put into the budget that we submit. So it's only when we budget, so in the next fiscal year budget, it's immediately included.
Budget.
2 years.
It is in the
It's a
initial
use cash.
budget.
Right,
But
right.
subsequent years, it's
Well, subsequent years, it's just included as a debt service line item because it's already built into the cost of
All the debt service
right,
proceeds.
right.
Cap interest just gave us a little break for a couple of years.
Right,
That's exactly what we did.
yeah.
that's what it is.
I did want to ask a question about our tax credits also that we get redeemed. I saw the recent audit report on some of those items. It doesn't encompass all of our tax credits, but it did account for almost $19 million worth. Now, one of the things I'm going to talk to the budget chairman about is whether or not we need to include in the budget a provision for tax credits to begin accounting for that, because right now, the tax credits that I saw were impacted in the OPA's report brought us down $19 million, and it affected areas like GRT, alcohol and tobacco taxes, and specifically those monies are earmarked for the Healthy Futures Fund. And so those tax credits directly impact things like the hospital and the sports programs. But we don't in anywhere account for that potential impact in the budget. So when we anticipate, let's say, just to make the numbers easy, 200 million in GRT, and 15 million of that is coming from alcohol, tobacco taxes, and those get abated because of the tax credit that was provided for them. We are budgeting for 200 million, but our actual cash is going to be short by the 15. So if these tax credits were properly accounted for in 2014 in the budget, wouldn't that have also contributed to the deficit because they weren't properly accounted for in the budget? Wouldn't that also be a contributing factor to the deficit because technically it brought down the actual cash in those respective areas by $19 million?
This is for the HFF funds. I know in this case, those two, in 2013, the audit spoke to all of that, and I guess Vice Speaker B.J. Cruz asked about that HFF and to what extent is the HFF made whole. And there were excess revenues that happened in 2013 and 14, and both show that there's no adverse impact upon by those funds at all. And so even with the use of tax credits, and I know that I don't have you have the specifics on the HFF. I know that we have Healthy Futures Funds. Healthy Futures Funds. I know that we still have excess revenues
Yes.
in 2013 and 14, and they
Yes.
use the tax credits. They utilize the tax credits, and we're able to pay and make them whole.
Again,
Okay, but on the tax credit, I have one other question.
right.
Do you guys issue a 1099 when you guys give a tax credit?
Yes, sir. We are working with revenue tax because of disclosure issues. They can't provide us the taxpayer's names, so I have asked DRT. I go, well, then you need to make a decision because if you can't provide us that information, then your office
So
should
who
provide
issues the
it.
1099?
It's going to be.
Does anybody issue a
Yes, it's DOA for the vendors that we have oversight of, which is primarily everyone we pay under the sun. They do get 1099s as well as GBB, the receiver, the solid waste vendors. Although
But on these tax credits, did
on
they?
the tax credit that will be issued under DRT's oversight.
Did DOA give any 1099s to the Luzon tax
Like I
landowners?
said, Senator, we're not able to because of tax disclosure confidentiality issues. We're not provided the taxpayer's name, so Department of Revenue Tax are responsible for issuing the 1099s.
So the OPA is not the only one that's not being allowed to see anything?
Yeah.
You're also precluded from that when it's your revenue that
Yes.
is being affected?
Yes, sir.
I guess we defer to DRT.
Yes, I'm sorry.
So just to again try and recapture the question about the tax credits.
How many governments do we have?
If we don't budget for if we budget but we don't account for tax credits and the tax credits get redeemed and they reduce the revenue by those amounts, doesn't that adversely affect our revenue situation?
No.
Senator, okay, let me just do a walkthrough on how tax credits are applied. First of all, we need to acknowledge that the expense and with regards to the Luzon land and the Teaching properties, they are general fund expenditures. What essentially happens is we allow the recipients of the funding from these tax claims, we allow them to apply their tax credits in lieu of GovGuam paying them for the land and the properties. So when this happens, we go ahead and debit the land expense and credit the GRT tax credit that was claimed, depending on what type of tax category. As we all know, and I know that, you're close to heart with the Healthy Futures Funds, we do have quite a bit of alcohol and tobacco taxes that are claimed. So the way the transactions work is we will still expense it in general fund. We will record the revenues in the correct account, which is the Healthy Future Funds for the alcohol and tobacco tax credits. But then we will record a transfers out to the general fund for the same amount of tax credits that were claimed. So it's a wash. It is it will be a transfers out, which is an expense, and also a tax revenue, which is a revenue. So it zeroes out in the Healthy Futures Funds, and then also make general fund whole. There is no effect, as you can see in the audit report, because you will see in FY13 there is a 6.5 million fund balance, and again, this already considers the reduction for the tax credits that were claimed. So this is netting it off. So again, if you're concerned about being in whole, it is in whole. It is a positive balance. In fact, we just, if you look at our draft for 2014, it is still, it has a positive fund balance of 4.5 million.
What has a positive fund balance?
The Healthy Futures Fund.
The Healthy Futures
Yes.
Fund. No, but okay, so what's happening is the credit is coming in being claimed against a revenue source for Healthy Futures.
Correct.
So you're debiting general fund and you're crediting Healthy Futures and using the general fund debit to offset the tax credit.
Right, but you got to keep in mind also when we do our projection for our budget for the Healthy Futures Funds, we do not include tax credits.
Now, but let's
Yes.
look at the whole picture here, though. Didn't we appropriate everything that we're supposed to be getting into the general fund anyway? So if you're taking from the general fund to make the Healthy Futures Fund whole, what are you shorting on the general fund side?
For the general fund, this applies as well to general fund. This is in general. Tax credits are not included as far as the projection for the revenues for the ensuing budget year.
Right.
So BBMR does not include our tax credits. We only include
But if you're using
the
current year cash to pay for those, then
cash collections.
Right. So how are you paying for that if we're not budgeting for it?
Well,
From us, we just...
If our budget is based on all the money that we're
The
supposed
cash.
to be bringing in, right,
Correct.
and we don't budget for these tax credits, then what money are we using to pay for these tax credits if everything else was already budgeted for?
okay, what essentially happens is we do, although we don't budget, although the portion of the tax credits are not considered in the budget, we do keep in track internally. So we know that every year we're going to have a range between 6 to 10 million a year, for example, for Let's-On and then for Tizen a certain amount. So we do keep in track. We keep track of that internally. And again, there is already a Tizen with regards to Tizen. There is already a set amount based on the loan agreement. So we know how much the credits, what the cap is. We know it's going to be a fixed amount, 8.5 for FY16 and etc. So that is internally tracked within BBMR and accounting. So we do budget it internally as well as consider, and again, the fiscal year budgets, the annual budgets, the tax credits are not considered. And the reason for that is we know that we're going to use it to apply the credits to the land expense and the Tizen properties. So, like I said, if you just look at the audit reports, it doesn't have any negative impact.
But how do we know which year it should be recorded in? Say you're getting, like for Let's-On, $20 million in tax credits. Say all of the land was mine, and I got $20 million worth of tax credits, okay? I decided I wasn't going to use it this year. Is it already recorded somewhere as a,
We did record.
how is it recorded?
We recorded $19.4 million for the loss and liability, and 55.3 for the Tizen property liability, and so this will not be immediate. I guess this is the legislature allowed that to happen with this.
No, I understand that we may have legislated for it, but I'm just saying,
but the law
how,
requires that allow
where
them
does
to use
that get taken from? When somebody, that's $70 million.
Yeah, and so
My math is right,
in 2013,
So how do you, where is that coming from?
They're taking a tax credit from the Lazon, and in 2013 and 14, I know we I guess in the audit report from
But if it wasn't
Doris
redeemed,
Brooks,
what happens to it?
she spoke to-
Where is it recorded? How is that shown? Say like the $20 million or 19.4 for.
Yes, sir.
You gave them the certificate for 19.4.
Correct.
But
Yes.
they only utilized 3 million
That's correct.
this year,
Yes.
and they still are holding on to 16. What happens? When is that recorded?
Okay. You will see the tax liability, the tax credit liabilities in the government-wide financial statements. You won't see it in the general fund. This is GASB requirements. You have all liabilities that are not paid with current year financial resources are booked in the government-wide. Because if you need to look at it when, the fund financial statements, it's a snapshot of what you expect to collect and disperse within that fiscal year. Any obligations that are not going to be paid with current financial resources will be recorded in government-wide. And that's where you have your capital assets as well as your long-term liabilities. So that's where you would see the tax credit liability.
So taking us back now to the question of this 19 million, right? That was tax credits. If we took it from the general fund, what did we not fund with the 19 million?
I know that in the audit that was recently, done by OPA, they have all the specifics on that, and in the OPA report 15-02.
They specified that it came out of alcohol and tobacco taxes
Yes,
and everything, but what was just
alcohol,
shared with us was that you guys were
in-
debiting general fund
in
to make
2013
good on those funds. So then if you're debiting general fund, what did we short in the general fund? If we budgeted 100% of our revenue, and
it's
we ended up
general fund.
spending 100% plus 19 million, then where did, and we paid out that, we recognized that 19 million, then
Yeah.
where do we short?
I guess in the current general fund, they did the land expense $10 million, and the government-wide financial statements, the long-term GRT revenues was credited by GRT revenues by $10 million. In the government financial statements in the OPA report, they did the government, and in 2014, you see that when the audit is completed, and it will tell you that the 19.4 liability for Lazon was debited, and the Lazon land liability will be credited in the 19.4 liability. So that would be in the final audit that's going to happen maybe in June or something, when they're done. So.
But if those credits were claimed against revenue that we already budgeted for,
These
then
are-
that means those revenues were not realized, and so those budget items were not funded. So what did we not fund?
There's
I understand what you mean. Where you can actually measure this is if you do a budget to actual general fund only. But we have a draft of the general fund financial statements as of 9/30/2014, and so far we're showing that we have an excess of 20 million if we compare budget to actual. So what we can do is compare that number to what was actually applied, yes, towards tax credits.
So in the in the pro forma, you're showing budget to actual surplus of 20 million,
Correct.
but we're also having a 2014 deficit of 65 million.
That's correct. So that needs to be taken into the consideration.
Right.
Yes, you're right.
So yeah, you can see why
Yes.
I'm the chair of finance. I'm trying to
Yes.
figure out how much money are we going to
Okay,
have.
and you know,
So that when I sit down with the chair of budget,
Sir.
I can agree with them and say, yeah, you
Yeah.
know what, those numbers look good to me too.
Yes.
And
again, sir, we can go on and on because you got to remember that with regards to GASB 54, the 65 million includes DOE, and DOE accounts for 26 million of the 65 million deficit. So it really it's more complex than what it sounds like. Yes. So again, yeah, there's other variables that are considered with regards to the 65 million operating deficit.
okay. Well, I mean, and for me, right, it all comes down to, you know,
Yeah, I
the
understand your
validity
point, though.
of the numbers,
Yes,
right?
I do
And then what are we
understand.
going to do for FY 2016? Are we going to create a provision for tax credits? Because technically these tax credits that we are having to offset with
Yes.
revenue,
Correct.
they're trending higher, aren't they? Year over year.
Yes. Yes, sir.
And we're still not budgeting for them.
Yes, sir.
And they're still impacting cash.
Correct.
Right.
And-
So,
Yes.
right.
And-
Right. So
Right.
we need to figure out a way on how we're going to.
And that's a
Right.
good point
Or
because
provision for
we
tax
already know what the obligation is for T's properties. We should include that in the budget.
And then,
Yeah.
but for example, the Ladzon is kind of open-ended.
Yeah.
It has a finite amount, but it's
That's
kind of
correct.
open-ended on what the redemption rate might be.
It
And
depends,
then,
right?
and those
yeah.
are, and the auditor did inform me also that we still have other tax credit items that she hasn't even audited yet. So the 19 million is just the Ladzon and the Tizen property tax credits.
Well, I think with the zone, it's limited to 19.4 for the zone liability.
Right, but we
So-
still have the tax credits that we have not gotten hard numbers on
And
for
of
the
course,
MIP.
Tizen is 55.3.
You know, and that also is affecting cash. So, you know, we're gonna wait for those things. But in the meantime, I guess the intention of this hearing is to get a firm handle on what our actuals to budget are, so that when we go
Yes.
into the budget year, you know, we're able to really we're able to do it within that context.
Sure.
I think we pretty much covered a lot of the questions that we had on that I sent to you. I did have a question on something that I didn't send to you, and this was actually sent to me by a member of the public concerning vendor payments. And the question was particular to DOE vendor payments. And so I just wanted to get an idea government-wide, because everything flows through DOA, but if it eventually goes to DOE and they'll make the payout. But government-wide, where are we on our 30, 60, and 90-day past due payables?
For DOA or DOE?
Just all of our vendor
I
payments
know
that we're supposed to.
we're able to pay our vendor payers within the 90-day window. I mean, generally we've been paying within the 90-day window. And as much as people want to be paid immediately, it's part of the cash management issue. I know that for us, I remember for years it's been a long-standing situation for us for small vendors who complain about the fact that they're not able to meet their own payroll, and I guess the whole goal was to ensure that we try to take a hold of our deficit, take hold of our expenses, and ensure that we pay our bills and pay our obligations, like tax refunds.
Well,
and
when we
vendor
enter into agreements with our vendors, do we specify that we're going to pay them on a net 30 basis or a net 60 or a net 90? Is that specified in any of our agreements with them, or do we have a standing government requirement or law that we pay vendors within a certain net period?
I think there's no net period there.
So if we
don't have that.
pay them after net 90, if we pay them in 120 days or whatever, I mean the vendor
Yeah.
pretty much just has to kind of
Yes.
bite the bullet on that.
Correct. I think with regards to DOE, I like to add, I believe I strongly believe they're having challenges with paying with their vendors. If you notice, again, they fall within general fund. If you notice, their I believe FY14, they just recently issued their audit report. They do have they're tracking a shortfall or a deficit within their operations, and this is partly why they're having problems paying their vendors. So I believe it's I believe this party is the right party to talk to with regards to how we can catch up and find sources to pay so that they can pay their vendors.
Well, is there operational deficit as a result of us not providing enough of an appropriation, or did we provide enough appropriation but the cash isn't there to meet the appropriated amount?
Sir, if you review our audit reports, like FY13, we actually always we give them beyond what was budgeted. I don't know if that was good to say. So, in other words, you remember last fiscal year, FY, or 2 years ago, FY13, we had a shortfall in Territorial Educational Fund. As you all know, funds DOE, primarily for utilities. Well, there was a shortfall for a substantial amount. That's the first time they had an operating deficit. And what we did was, we had to assist them, so we paid them out of the general fund coffers. So again, this is a cash management
That's
tool.
part of the deficit, 65 million that
Yes,
you already
sir.
reported.
Okay.
Right.
And again, FY14, you notice they have a 5 million operating deficit, and this is aside from the 21 million ARA related projects deficit, because altogether they have a 26 million. Out of the 26 million, 5 million is from a shortfall. And again, you're going to notice there's a coincidence because there's also a shortfall in our TEFF fund for the same amount.
Right.
So what they had essentially done was they had confidence, I guess, that they were going to receive the full allotted appropriations from the TEFF fund, and they have already made commitments and obligations that they had to pay.
That was 2014 FY.
Yeah,
Yes,
that's right.
sir.
But for FY
And
2015.
even 2015,
Okay.
there's the challenges we have. I know, in fact, when we spoke to you about the real property issue, that affects the TEFF.
Right.
And I know that one of the major issues for them is the fact that they're not they're not able to meet their bond indentures and also the other obligations for utilities especially, and more recently, I know in constant communication with the Selling Titanal and DOE, they have some major challenges, and as much as we're waiting for the February, I guess April and May, usually they have to wait for those TEF funds to come in. And that became a major challenge for them. So,
But they haven't expended the full amount of their appropriation yet for this fiscal year.
we're giving all the allotments that they asked of us that we've been giving to them, and I know they have some challenges there, but I think the entire government, we always have challenges, and we try to. There's other obligations we have to take care of as well.
So they're receiving 100% of their allotment. They're not on any kind of reserve or anything like that.
Where are we at on the? We paid the full.
Currently, we are on track as far as our remittance to them. So meaning to say whatever's due now is because we pay them every payday. So tomorrow's Friday. Yeah. Or Thursday. So tomorrow's payday, so they will get the remittance that's due for this payday. So that we are current.
In fact, I know
It's the
I know that every day in our constant communication with DOE, I know they're very we're very cognizant of ensuring that they meet all their obligations. Their payroll is that's number one, and number two, their other vendors related to their other obligations to meet their full payroll and other issues. So.
Okay. I think it'll be good for us to get a good handle on whether or not we have any any vendors that are more than 90 days past due. And I
But
really think
you're talking about DOE, right?
well, I mean, the whole government, all money flows through DOA,
I
right?
know.
Whether
I know, but I'm talking about DOA. We've been able to manage it. That's a challenge too for all of us. We have to have that challenge. If you look at the dollar, we have to pay indentures, and then we have to pay the allotments for DOE.
but see, like for
UOG,
example, if
UGCC.
we didn't have the debit from tax credits, for example, that would be $19 million that we could pay to vendors.
Yeah. Well,
you see, so that's kind of why this whole
I see what you're
conversation is one all-encompassing question of exactly how are we, going about with the projections, the budgeting, the real cash, the payments that we owe to our vendors, and whether or not we have the right mix going on, or are we cannibalizing from one side and causing people to wait on the other.
That's right.
So-
But the law allowed that to happen, and the reality.
Right.
That's what we're feeling. These
That's why it's
issues.
important we have the conversation, because the lawmakers are the ones that can change the
Yeah.
law.
And we're all
That's
we're
right.
we're part of the government. So
Right,
And
right.
I know that, for example, we have all these things. We couldn't afford it, but we want to build schools. We couldn't afford to build a landfill. We have to have land. We have
Right, we have to make choices
It's
sometimes.
and this happened years ago. So
Right.
at the end of the day, here we are recording these transactions, and these are concerns that they've been asked of.
Can we get a regular report of those vendors that are 30, 60, and 90 days past due? Maybe regularly every month, so that we can just see where we are in terms of are we paying people and how long are we paying them, and see who's more than 90 days past due, and then that way we'll have a record too of how long they're on the list. Somebody 90 days past due for 6 months is going to be real problematic for any business. And then maybe we'll need to evaluate if we're going to have any kind of firm policy decisions or laws that will provide some kind of relief or remuneration to these vendors who are made to wait beyond a reasonable time. I know, coming from the banking industry, once you're 90 days past due, you're getting written off and you're going straight to court or collections, or they're picking up your car right out of your garage. So this is just a conversation that we need to have in the context of all the other, tax credits, capitalized interest, bond payments, and Section 30 money, because
It's almost also something to maybe look at the overhaul of all the mandates that were given to of us, and that all affects tax credits. It affects a mandate to pay for this, to pay for that. At the end of the day, which mandate are we going to pay for? Are we going to pay for this? We have to take care of the tax credits. Are we going to take care of this mandate number 10,
Right.
100 or 300? We have numerous mandates.
And I agree with you very
Yeah,
much,
it's
sir.
just cash.
And that's why, when I look back, right, when I look back over the last, maybe 5 years, and I see our budget grow from 600 million to 800 million, and I say, why are we still having the same conversation $200 million later? If we just had that conversation 5 years ago and we started saying we're going to do things differently going forward, then as the revenues increases and the economy improves and we go from a $600 million budget to a $200 million budget, all of a sudden we're not doing those same things $600 million ago that we're just so happen to find ourselves doing $800 million later.
I agree.
And that's why I think
Look
that
at-
it's very important that at this stage in the dialogue, we begin to really, really iron out what's accrual, what's cash or modified accrual. Are we properly accounting for tax credits? And if we're not, how do we go about doing that? And then are we going back and are we making adjustments to prior fiscal years because we said that there was a surplus when there in fact probably might have been a deficit? And how does that play into our 5-year rolling average? Just a lot of different financial questions. And the ultimate aim for me, ideally, what I would love for us to be able to do is have a budget $100 million higher with $100 million less of these kind of conversations.
I know.
Because if we're talking about it at 600, why are we talking about it still at 800?
Yeah.
So I thank you very
That's
much
a good
for
service.
answering the questions. I'd like to turn it over to some of my colleagues if they may have any follow-up. Senator Atta, please.
Yeah, I guess we've been discussing about Section 30 funds and bond payments and all that. And there's been this ongoing debate with the receiver for Luzon. And that Gov Guam thinks that the receiver should be actually turning over some of that Section 30 money for GovGuam, and GBB is saying, well, if you want some of that money, you're going to need to petition for a rate increase so that they can generate the revenues. So can you kind of comment on that debate, that ongoing debate?
Well, that's a long-standing, this dispute, I guess, between solid waste. I know years ago, when we first did the landfill, when I was there, Gita, I know that at the outset, the Section 30 was used as a backing for the debt service payments for the landfill, and when we did that. I kept asking him. I said, the receiver was very confident that when tipping fees are able to have a consistent source of paying, they were able to take care of the operational needs and also debt service. That was years ago, and I now. In 2015, here we go again, and they're saying that that tipping fees is. I thought tipping fees should be used. I guess their numbers about $10 or $11 million minus the allowance we did recently for solid waste, and I guess we're very close to the audit. Again, we were hopeful that part of that will be used to pay for operation costs for the landfill and pay the debt service and relieve the general fund, because the general fund is always our headache, and so because the receiver also said that this is a joint thing. This is not so much a joint thing as an issue that we have to comply with, and we are complying with.
But my understanding is that the tipping fee at the outset was set at a level that would generate sufficient revenue to pay for operations and
debt service.
Right?
Yes, absolutely.
But then it was also understood that somewhere down along the way, the debt service was going to increase.
Yes, right.
Correct? And the only way then that you were going to have the tipping fees pay for that completely so that they don't actually touch Section 30 money is that the tipping fees would have to be petitioned to be increased.
That's right.
And so the debate has been
who's going
to petition the PUC.
Isn't the receiver in charge of the solid waste?
No, he's just in charge for making sure that it gets. So So obviously then in the mind of GovGuam, it does not have the responsibility for petitioning the PUC to increase the tipping fee. Is that correct?
Yeah, I guess that's correct.
That's correct. And so as long as the two parties then maintain their positions, where GBB saying it's not his responsibility to petition PUC to increase the tipping fees, and the government of Guam believes that it's not its responsibility, then in the end, Section 30 is going to have to be tapped.
Yes.
Correct.
And we've been using these fundings. We've been. I guess with the late Senator Ben, this is something we had the conversation about that, about giving the money back to reimburse the general fund, and we thought that they will give us the funding back to the people of Guam, the general fund. And
why is the general fund to be reimbursed?
Well, the general fund is
because I thought the tipping fee was paying for. I thought the tipping fee. What I pay.
No, the tipping fee is not. The debt service is being paid by the general fund. The government has been doing that for years. And part of the general fund is Section 30. So anyway, we're paying for it. I mean, all of us, we're paying for it. Well, it's a double whammy. We're paying that way. We're paying the tipping fees that we're all paying for things. So that's what I'm saying. So I thought we're one government, and I thought in our conversation with the receiver, I said, well, this is your responsibility. He said, whose responsibility is it? I said, I thought we work. This is one government, and if you can do your part, if you have enough funding to pay your debt service, why we want to impose upon the taxpayer / ratepayer? So the taxpayer is paying for the debt service payments, and the ratepayer is paying the tipping fees. So my question to you is, upon my receiver, can you please take care of relieve the general fund from paying as a taxpayer from having to pay that additional liability? The never-ending saga between Timuas, Opalinu, whoever. I'm just teasing.
Okay, Senator, any of my colleagues have any questions for this group or this panel? Senator Morrison?
Thank you, Mr. Chair. I know we talked a little bit about you spoke a little bit, Ms. Kakigi, about the tax credit program, and you're able to track it internally. Do you have an idea of how many tax credit programs are out there?
Right now, the two major tax credit programs are obviously the Tizan and the Lesan land, but then there's also very small tax credits relating to other programs. DRT usually provides me that information. I don't remember offhand. I think it's Guam Greyhound, and yeah, there you go. Yes, something relating to some programs.
I asked that
yeah.
question because I know the
Very
chairman recently regarding the tax commission appealed and repealed and of course updated to look at ways we can improve with the tax commission's review. But at the same time, I'm asking this question because it seems like we don't have an understanding on this tax credit program completely, and I know there's also the QC program that's out there, and that's a tool that we use to incentivize investors to Guam.
Yes,
but at the same time, it seems like even with the recent passage of the tax review commission, it seems like we may have to maybe impanel a tax review commission specific to looking at the tax credit programs that have been passed to legislative policies or what's available out there as far as investment tools. So I bring this up because I'm not sure if we really reviewed it and looking at it from a perspective of how those are providing a good return on investment, even if they're small, and if are they providing a value to the community, because if they're out there or some of them are open-ended, there's some that are capped.
Correct.
We need to know if those programs should even continue to exist.
I agree.
And it will give us a better understanding. I'm not sure if, again, maybe this is a question for Reverend Tax and Gita, but maybe there has to be some complete review of the tax credit program. I have some measures before this body to look at regarding tax credits, but again, at the same time, I'm bringing this up because I'm not sure if that's have been looked at. I know this body creates a lot of these tax credit programs, but at the same time, I'm not sure if there's been a complete review of seeing or if it could become more of these programs can become more efficient, and enhance them. So if that, I would like to get that information. If you have any, you have a list, and see what's out there.
We have it. We can give it to you. But we have
even
to
the small ones. We'd like to see. I'd like to know what tax credit programs are open-ended out there as well. I'm not sure if there's any.
Gita has tax programs, and I know DRT, they have programs like that. So that's, I guess we can.
I agree, Senator. Gita and DRT has oversight on this, so we can communicate with our fellow departments and provide the information.
Okay. Thank you. Thank you, Mr. Chair.
Thanks.
Any of my other colleagues? No, go ahead. Senator? Vice Speaker Cruz.
Thank you. Kathy, I was a little concerned about that one admission that you made. Or maybe I shouldn't have said that, that we gave more than what was budgeted to DOE. How much more than what was budgeted was given to DOE in the last fiscal year?
When we said that, actually, we had provided them with funds, SS funds based on, this is similar to the 2% when we have a surplus or SS revenues. We identify those SS revenues, and then we go ahead and provide them funds for like their prior teachers increment.
Did they get 100% of what this legislature budgeted?
Yes, for general fund, but not for TEFF.
Okay.
Correct.
And so under what authority did they get more than what was budgeted for? Because I had that same question with BBMR.
Yes.
About his admission that the 12.9 in retroactive
Correct.
LEA payments were made that were unbudgeted. And I asked him,
All right.
under what authority was that? And he said, well, I was supposed to ask Department of Administration.
Okay.
And so I'm trying
Right.
to, now that I have you here,
Right.
under what authority did DOA
for-
pay for either one of those?
Okay.
Anything that's unbudgeted,
First,
under
yeah.
what authority does DOA have to pay for anything?
Well, let's start with
As
DOE.
you know, important as it
Yes.
is,
Okay, let's start with DOE. We use the 2% deficit reduction authority, and we use that. Based on FY12, there was a 2% that was authorized to pay for prior obligations. Again, when we pay DOE, based on that authorization and over above the annual budget, of course, if you do the budget after, we're going to be exceeding because we're using surpluses from the previous year. So that we use that authority to give DOE monies to pay for their prior obligation. If you remember correctly, we owed them for their merit bonus and for their salary increments. So, and it's not fair that,
yeah, but
we
you didn't give them back to 1991.
Okay, sir. We did give them at least for their merit bonus.
But
and
I understand,
Yes.
and so I'm trying to figure out.
So that's why we have, we overran the budget because we used the 2% authority, which are revenues that were recognized already in prior year.
And we've now announced, or you've announced, that there's a $65 million deficit.
Yes.
You're also announcing that you're tracking a surplus. What is that surplus that you're tracking?
Oh. Issue.
I guess the combined fund statement we just gave to you recently was I think we're tracking about this here somewhere.
1.2?
Yeah, 4.7. Yeah. Yeah. So we're tracking, and we want to continue to be tracking in a positive manner, and also the.
But if the tracking is 1.2, 4.7, whatever it is, wouldn't we need to track 65 plus in order to be able to come out of the deficit from last year?
I guess this 2014 is done. We paid those.
No, I understand, but in order to be able to get to no deficit, we would have to this fiscal year track 65 plus in order to clear last year's deficit and be even this year. But we're not.
Well,
the tracking surplus is a very small amount. It's not going to come close to the 65, is it?
And anyway, at the end of the fiscal year, you can have gas be 67 and 68, and the unfunded liability we reimbursed in the financial statement still that episode would have ended anyway. So. And we know that. I know that even that amount, we're going to do our part to try to continue to minimize do a tracking or responsible spending. At the same time, but we have to pay the major obligations we have before us, and this, like for example, tax refunds and allotments and other issues that to ensure.
And how much did we pay in tax refunds last year? Actually, I mean, total that you paid
Tax refunds, I think we
with EITC.
I don't have. We have a schedule here. Yeah, that's right. We do have a schedule here that we paid in 2014. I know we paid the provision of tax refunds last year was 122, right? 122. There it is. 122
was the provision.
120, and in fiscal 2013 we paid 154.
And how much did you pay in the previous year?
And in the previous year, 129. Here, let's see. No, 154 we paid. 154 in 2013. But again.
So when are we going to finally provide a provision that is real?
I know, but since we're paying tax refunds in a timely manner, and our success is our challenge anyway. For years,
I think we've got to at some point, as Chairman say, regardless of whether or not it was a practice that's been done for years and for decades.
Yes.
If it's bad practice, it has to stop.
No, it's not a bad practice. Because we should have paid the tax refunds in a timely manner, but we have challenges, and we know that. And since we had the bonds and they finally resolved that whole issue, we were able to pay for it. Now people are thinking that and of course they did responsibly. They wanted to pay tax refunds that they didn't.
Is Department of Administration complying with the law as it relates to efficient refund payment trust fund?
Yeah. We never used that.
Are you complying?
We never used that. You and I were there in 2010.
No, wait.
You were there in 2011 and 12 and 13 and 14 and 15. This is a long-standing issue that we did, and we're part of the legislation.
But it was supposed to have been taken care of.
Did we ever pay it back in 2002? 2002, 3, 4, 5, 6, 7. They're so minimal. We never used that law, and even today even though the governor is directed to us just to ensure that we pay tax refunds and pay the tax refunds within the timely manner, we're following the same course of thinking. But I understand what you're saying. In the prior year, in $154 million we pay for tax refunds. Those are people who want to go there and ensure we pay tax refunds that didn't happen. So people were, according to 2011, 12, 13, that 154. People were coming and filing their tax returns and all that.
And how much of that 154 was in advance that was paid from Section 30 and 13?
This is the one advance.
Yeah.
Well, I mean,
that wasn't my language. That was
okay.
That was yours, wasn't it?
Can I just talk about or reiterate what Tony is saying with regards to compliance with the fund? Let me just give you an excellent example. Remember when we were Senator Nicolas' office requested for income tax efficiency account bank statements? It showed obviously that we were not putting the set-aside requirement as required by law. But what we continue to reiterate is you have to allow our department to do our cash management. What that means is when the cash, we have our peaks and valley, right? We have months.
But the tax efficient refund trust fund was supposed to be a cash management tool.
Yes, sir.
It was supposed to have you
let me finish,
set aside. Are you complying with the law? Yes or no?
What I'm saying is,
are you complying with the
now
law?
that now that it's April.
We have been complying with the law.
Yeah, now that we tax our,
you have the 26% in there.
It's getting 26%.
It's not there. You're
with-
not complying
No,
with the
but-
law.
Right now, as we speak, because I just spoke to the chairman before the hearing, I said we just paid the for he's very aware of that. We overpaid using the 26%. We're over the 26% right now, right, Kathy?
That's why I was trying to
Oh.
finish my sentences. Now that taxes were due, we have the cash, we're updated with our set aside. So that's what we're saying. It's just a matter of cash management.
Okay, then
Yes.
explain to me, is my understanding of what that efficient tax refund, how do you interpret that's supposed to be done? What do you understand that's
my
supposed to be? How is that
understanding-
supposed to be done?
My understanding is it's the allocation of the provision of the tax refund. You take that number, you divide it into the income taxes, which encompasses individual, corporate, and withholding. So what happens is the law says you're supposed to set aside whatever that percentage is, that calculation, which I understand is 26.01%. So we take whatever income taxes that it was collected for that month, we take 26.01%, and we're supposed to set it aside and put it in the trust account.
And is that supposed to be used for paying tax refunds today, or is that supposed to be set aside for paying tax refunds starting January of next year? What is your understanding of the law?
Well, they're competing public laws. Public law, the one that allows us to pay prior year, and I know you
No,
wanted
but
from
but
Jan-
on the efficient tax refund trust
and
account,
but
what does the law say
there-
it's supposed to be for, Tony?
Yes, that's one law. There's another public 1, 2, 3, 3. That I mean, it's in the law. They allow us to pay prior year tax refunds. And so, how far do you want to pay tax refunds? Yes or no? Do you want to pay?
You
in
got $300 million
2014,
to pay tax
or do you want to pay?
refunds. And so when are we going to finally have, I just need an answer.
Yeah.
Do you believe that that fund is to pay for taxes today, the tax refunds
It's
today, or for
for-
the tax refunds to be paid as of, after the 1st of next year?
Right now, it's intended to be as an advance for the following tax year, but that's not a realistic law, and let me say why.
But didn't we try to make it realistic when we got $300 million
No.
bond, and we were supposed to pay everything off
We did,
and have enough
but
money set
if
aside?
you recall, the governor wanted to take out an additional 100 million in order to comply with this law, and this body said no. But so
You're
yeah.
supposed to have that savings. Okay, let me
Yes,
get to another.
that's
Let me get
why.
to another question. We're trying to prepare for the next budget,
Okay.
and you keep talking that the audit's going to come out next month. Last year it came out in July. We should already have the budget ready sometime in July because we meet in August. Do you think it would be a good idea for all of us to have a completed budget months, not days, before we put together a budget? Or should we just, out of the dark, just try to figure out how we're... Because even when you gave me the list of 65 million in deficit, you gave me one sheet which said this is how much all of these things were, and that's where the 65 came from. But it doesn't have the transparent little footnotes that Kathy was talking about.
Yeah.
So we need to
Sure.
have an audit
No,
early.
I
Early.
understand. That's why.
So can you just explain to me what happens after the September 30th before we get the audit out in June?
See,
What happens?
This is an
What
antiquated.
goes on?
Mr. Vice Speaker, this is an antiquated financial management information system, and one of the biggest criticism for us is that the highlight they always speak to take care of the antiquated financial management information system. In as much as we want to do it in March. that's a wonderful thing we can do, but obviously we can't, and that's a major challenge for us. And Kathy can speak to all of that, and she's been talking about it and asking. That's maybe in one of the budget items you can include that to take care of that one issue, but. For the audit, we're hoping that this will be done in June. I think we're pushing for it, and I'm trying to get it done with everything and give it to you as soon as possible.
I understand, but Tony, I'm trying to ask: should we not have this much sooner so that we can use it in trying to determine what the budget is for the ensuing year? I mean,
Yes.
You've worked for other companies outside.
Yes, sir.
Do they take 9 months? No. People would be fired.
But they probably have the resources. We don't have the resources, and if we can budget the financial management
But the
information
issue
system,
is
as
not so
requested by-
much resources, isn't it, Kathy, that you should be keeping
Yeah.
It's
adequate records throughout the entire period so that when you close the books on the 30th, they can almost be ready to be looked at the following day. But you're chasing around, you don't even have for last October.
right now, like Tony was trying to say, we do have an antiquated system, and even our auditors are
We have an
frustrated.
antiquated system and we've been using that system for years.
Yes.
And the
Yeah.
same statements about we've been doing this for years. We've been doing this for years. We've been using the antiquated system for
Right.
years.
That's
And
right.
so that's why I kind of want to make sure the conversation stays focused on
Yes.
the fact that we're never going to get anywhere if we try to rationalize away why we are in the current situation and say we need something else to make it better. We need to look at the current situation and we need to say, what have we been doing over the years that we need to do differently today, and how can we work together so that we can make it better tomorrow? And so for us here, does the efficient tax payment trust fund work better if we put that money away in advance? It would work better. People would be able to get paid out faster. To do that, we need to have a realistic budget that's going to factor in maybe those revenues going into that and not going someplace else. And if we need to have that conversation as a government, then we probably should, or we need to reconsider whether or not the law is realistic.
We have to work with you guys to look at. There's peaks and valleys here.
And
challenges for
peaks and
us.
valleys, all I'm trying to get is
Yes,
for
but-
the audit. Okay.
Yes.
Can you explain what happens between September and June? I mean, because you're telling me you have a financial system that's antiquated and needs to be
Yes,
replaced.
it's an antiquated system.
So explain to me the antiquated system that you're utilizing and how you think it can be improved and what we can do to improve it. This is your oversight hearing. Now tell us what it is that is wrong with it and how we can improve it. What do you need from
This
us
is perfect
to
opportunity
improve
to
that
speak
system
about that. Financial
Okay.
so that we can get it out faster?
And just
Yeah.
preface that by understanding the budget chairman's asking, so this is your opportunity to say exactly what you want.
Well, Senator, first of all, we need monies in order to get a new system. I mean, this is something that my staff and I have been intimate we went as far as writing out specs. They're this thick. As you know, we account for $2 billion. We account for over 100 funds. We account for over 600 federal grants. We are endless. And I mean, you look at all, and not to mention all your mandates, you wonderful people that we have to comply with. So in order to efficiently and promptly provide information on a timely basis, we need a system that we're able to account for our fixed assets, which includes our infrastructure. As you know, our infrastructures are accounted by DPW. And then we also have engineers that are involved in, as far as tracking costs. So we need to track all that cost. Right now, that's just done in the spreadsheet. And then, not to mention, we have, and you're talking roads, and
Okay, Mr. Chairman,
I mean, streets.
Maybe we should. I'll have this through the chair.
Okay.
Write down in
Yes, sir.
narrative form the entire process.
I'll give you
and
a book. Yes.
where you think we can be of assistance.
I appreciate
But,
it. Yeah.
but put it down. This is what we do every single month.
Okay.
This is how we could be more efficient if we could
Sure.
have something that
All
would report it out.
Yes, sir.
Because we're still chasing around trying to reconcile
Oh,
9 months after the.
How do you think we feel, my staff? I mean,
Well,
Yeah.
no, let me make, this is what the request is going to be.
yes, sir.
Exactly what it is you need for us to be able to do a quarterly report and an annual report, just like a company that has a $2 billion revenue management stream and 100 accounts and federal grants.
Yes,
I mean,
sir.
there's
What you do.
enterprises out there in the private sector that manage multiples,
Yeah.
exponential multiples of what we manage. And they're able to do it in a fashion that complies not only with Gatsby, but
Yes.
with a very fickle investor environment
Yeah.
that will sink your stock down to zero if you ever misreport or have to
Okay.
file an amended report. I mean, Apple will
Yeah.
lose billions in market capitalization overnight if they did not meet reporting requirements. So, if they can do it on such large scales, surely we have to be able to do it
Okay.
here. And if the budget
Yeah.
chairman is opening the door, I want to make sure we walk
Yeah.
through it very clearly. So when we ask the question of what do we need, I don't want, we need to fix the road or we need, the
No.
the
No, I
answer
understand.
needs to be very clear. And the
Yes.
answer needs to be, if you want us to do a quarterly report and an annual report and an audit
Yes.
within the first quarter of the ensuing fiscal year,
Yes.
and if you want us to be able to provide snapshot reports of vendors that are 30, 60, 90 days past due, and if you want us to provide real-time access
Sure.
on what the cash balances are. I mean, if you go to usdebtclock.org, I would love for us to be able to have that on Guam, where I can go on the website and I can
That'd
see
be an
exactly what the
ideal thing for
balances
us.
are in each of those individual funds.
Okay.
Yeah.
So
Yeah.
let's walk through this door. I'm very grateful
Yes,
the budget
sure.
chairman is
Okay.
opening it for us.
Yes, sir.
Tell us exactly what you need
Yes.
to come up with that optimum system.
Yeah.
Okay.
And please make sure that it's not one of those things where, Revan Tax bought a scanner for GRT that broke and now we can never use it again. This has to be sustainable.
Yes.
This has to
Yes.
be something that we're going to be able to back
Right.
up with a backup system and something that's going to be able to communicate
Yes.
with the public auditor and the Department of Revenue and Taxation.
That's right. We'll do
Okay?
that.
So
for
we're
sure.
going to put this on the top of the priority list as far as
Thank you.
oversight chair and agency,
Yeah.
Thank you,
because
Mr.
I want
Chair.
this to get funded in the next budget. Now that the budget chairman is
Thank you,
is
Mr.
here
Chair.
giving us
That's
the
good
green
for
light.
us. So we want to do this for a long time.
But
so.
but that I still wanted to make it clear that while we're going to be shooting to be able to get all the tools necessary for us to get to that ideal point, we still need to be able to reconcile where we've been before,
Yes.
and we still need to have the very clear dialogue of
Yes.
all the impacts that all these floating things are
Yes.
having,
Yes,
because we still need to budget for it in FY 2016 also.
absolutely.
Understood.
Okay, Mr.
Yeah.
And we're
Chairman, is
working
that
with the
to your
chair,
satisfaction?
with the chairman of operations.
Mr. Vice Speaker, any other questions?
Senator
Espinosa.
may I thank Mr. Chair, and I appreciate this discussion. I'm learning this process as we're going along, even though I've been in office before.
We're together.
I guess the question is, at this point, and I appreciate the chairman, the budget chairman, and the chairman right here, right now, kind of giving you support. If it's been such a big issue for you to get a new system because you realize that it was been an antiquated system, how come it's never been requested for before?
We've been making that request in all our audits. This is a major highlight, and I think Doris has been complaining about that for years in our audit, right?
But was it ever
But,
put
you know,
into budget,
it's-
a request
it's-
in terms
that's,
of
you know,
going
that's-
down that road? I mean, because I understand when we established the
It's-
Office of
it's about
Technology,
cost.
I would imagine that the Office of Technology would be the office that you would
Yes.
go to say, this is what we need, and then you go down that road.
Yeah.
And we're no closer now than we were back then. So again, I
Yeah,
still don't
see.
understand.
But this is one of the highlights in our audits since how many years back? It's and even Department of Interior, when they did the audit here, the Inspector General audit, they spoke about that as well. And so.
And when was that?
This is years ago.
Exactly, and then that's the point I'm trying to get to. How come we haven't done it yet?
Then we had the, if you remember, Senator, because we had the major issue with the Oracle. and the oracle became, and of course it became silent for because we don't have that information 1 year or 2 years, whatever the case might be. But nonetheless, they have to go back and recover to the old system that happened decades ago. And
Right.
so, and that's the same system we've been using since then. Now, and when you talk about budgets in general, when books were unauditable, and we have a major deficit, items as high as 500 or 600 million, we're still passing budgets at the same thing. But I understand now we want to get right on track and continue to ensure that we be able to move forward prospectively and in the right direction.
And again, I do appreciate this conversation, discourse right now. But again, I just don't want it to be empty words.
Yeah,
going
no,
forward.
I understand, Senator.
And also, I guess when we come down to what we're looking at and what kind of budget we should be appropriating to you for this expense, right? Then that gives us pause on other special projects that some of us might be looking at to say, okay, let's hold off on some of the expenditures because this is probably first and foremost that we need to address to be able to get our financial house in order. And again, I just want to make sure we're all on the same page, and it's a very serious matter. As excited as we are getting, let's be real and let's just get it done.
Caesar Sponsy.
Thank you.
Thank you, sir. Thanks, sir.
You want to know something ironic? The Oracle system is now the predominant financial management system in the United States. Okay? So this is one of those situations where, and I know that we've been talking about things being done like this for years, deficits, multiples higher years ago. But I think this is an excellent time for us to step back and reflect and saying, we have had legacy issues, but we can overcome them if we face them head on. And instead of us trying to say, we're using it for cash, or we're using it for accrual, or we're using it for this, let's just face it head on and say, ideally, how do we want to be managing the money? How do we want to be tracking it and reporting it? And how do we work our way to there? Some of the things that I think we can come away from this conversation on is that we have a commitment to get the systems that we're going to need. Another thing that I want to come away with this conversation on is that we acknowledge that while there have been ways to manage money in the past that we've been able to survive on, there are, I don't want to say bad practices, I'm instead going to say there are better practices, or there's even best practices that we can begin incorporating that we may not be able to afford full on up front, like for example, the efficient tax payment trust fund, but maybe we can gradually ease ourselves into that. And maybe we cannot immediately implement a reset of the Section 30 budget, in the Section 30 revenue into an ensuing budget, but maybe we can work our way into that.
Right.
And I think that if we can inch our way for those kind of things, then we can do it in a way that's manageable. Because if, like I said, we're able to get our revenues up $200 million in 5 years, then if we keep this mindset over the course of that same period and we grow our way into this new normal, it's going to be a very sustainable financial environment for the government and for the people of Guam. So as your oversight chairman, my commitment is to work with you on that.
Sure.
But in order to do that, it's going to require us to have a lot of political discipline so that we're not jumping around saying we're tracking higher, let's go and appropriate for this next thing. Or we're tracking higher and we're going to go spend on that next thing. And that's going to get very difficult for us on this side of the table.
Yeah.
But I'm glad that a lot of us are here tonight to understand the nature of the conversation and to try and come to terms on getting on board for that same goal. Because once we get back to that equilibrium that's sustainable, then every politician after that's going to be the most popular, because every real tracking in excess of what we budgeted for is something that can actually be appropriated without causing potential disruptions in future budgets. But we've had a long day, but I really thank you very much for joining us here today and for answering these questions. And I'm glad that we're able to get a better understanding and get some very attractive commitments from some of our colleagues here today.
That's right.
So I think this was a very productive hearing. And if there are no further questions or comments from the panel, we can adjourn today. We'll adjourn at 6:35 this evening.
You have to have dinner.
Thank you very much for joining us.
Mr. Chairman.
Thank you.
And members of the